Welcome to the Deep Dive. Today, we're really cutting through the noise, trying to bring you the most vital insights from recent market developments.
Exactly.
You've shared a whole stack of fascinating updates from the financial world, and, well, our mission is to unpack them one by one, give you that shortcut to being truly well-informed.
That's right. Because in today's, fast-paced environment, understanding the nuances, understanding them quickly, it's just invaluable.
Yeah.
So we're going to distill what's most important.
Connect the dots a bit.
Yeah, connect the dots, reveal what truly matters for you.
Okay. Consider this your essential briefing, then, designed to give you those aha moments, hopefully without the usual information overload. Let's get started. Our first significant development, this one comes from Adani Green Energy, and it looks like a monumental achievement in India's renewable sector.
Mm-hmm.
The company has just surpassed a record 15,000 megawatts of operational renewable energy capacity. That's not just a number, right?
No, not at all. It marks the fastest and the largest capacity addition in India to date. And what's fascinating here isn't just the scale, though that's huge, but the speed.
Right, the speed.
With the commissioning of just over 1,000 milliW power projects at Khavda, Gujarat, their total operational capacity is now up to 15,539.9 milliW.
Wow.
And the portfolio is impressive. Very diverse. Over 11,000 milliW solar, nearly 2,000 wind, and another, 2,500 milliW wind-solar hybrid. They are genuinely the first and only renewable company in India to hit this landmark.
And mostly through greenfield projects, you said, building from scratch.
Primarily, yes.
Yeah.
Primarily through greenfield.
And here's where it gets really interesting, I think. This 15,539.9 milliW portfolio, it can power approximately 7.9 million households. That's quite something.
It really is.
But the CEO, Ashish Khanna, stated their goal is even more ambitious. Accelerate from 15,000 milliW to 50,000 milliW by 2030.
50,000, that's a massive leap.
It is, and it includes developing the world's largest renewable energy plant at Khavda, planned for 30,000 milliW on its own. This plant, get this, 538 square kilometers.
Which is huge.
5 times the size of Paris. And apparently it'll be visible from space.
Incredible. So if we connect this to the bigger picture, this development, it signals a really significant step towards India's sustainable energy goals.
Right. Both energy security and environmental initiatives.
Exactly. On a global scale, too, it really raises an important question. What does this rapid expansion mean for the broader energy landscape and, for investment in green technologies going forward?
Good question. Okay, let's shift gears. Moving on to our next development, Alembic Pharmaceuticals.
Mm-hmm. The pharma sector.
They've seen a significant surge after securing USFDA approval for a generic drug, doxorubicin hydrochloride liposome injection.
Right, a crucial cancer drug used for ovarian cancer, AIDS-related Kaposi sarcoma, and multiple myeloma.
So this approval is a major milestone for them, for their U.S. generics portfolio.
Absolutely. They got final USFDA approval for 2 strengths, the 20 milligram and 50 milligram single-dose vials, and importantly, it's therapeutically equivalent to the original Baxter's doxil liposome injection.
And the market size.
The total U.S. market for this specific drug is estimated around USD 29 million for the 12 months ending March 2025. Not enormous, but significant for a generic entry.
And this adds to their growing list of approvals, doesn't it? It brings their total ANDA approvals. That's the generic drug application.
Abbreviated new drug application. Yeah.
Right. It brings their total to 224, with 201 being final. That consistent momentum, especially in complex generics, seems to be a key driver for them.
It definitely points to their strategy of expanding in the U.S. market. And it highlights, the importance of these regulatory achievements in pharma.
So for you listening, it underscores how specific product approvals can unlock new market opportunities.
Right, precisely. And contribute to a company's financial performance, revenue visibility, in the coming quarters, regulatory success leading to commercial opportunity.
Got it. Okay, next up, infrastructure. Ample Parks. This is a joint venture between Actis and Mahindra Lifespace developers. They've just launched their first industrial and logistics park in Chennai.
Yeah, and this is a substantial project. It's a 71-acre land parcel located in the domestic tariff area, the DTA, of Mahindra World City.
Okay, that's in the Oragadam Industrial Corridor Maramalai Nagar Micromarket, the OMM. Sounds strategic.
It is. Basically, it's well positioned in a key industrial zone. The initial investment is around rupees 800 crore.
About 96 million US dollars.
Right. With a target to earn rupees 110 crore each year once it's done, and maybe rupees 1,400 crore over the next decade.
And here's where it gets really interesting for the region. This park is expected to offer around 2.1 million square feet of leasable space.
That's a lot of space.
And the management stated it will generate employment for nearly 11,000 people.
Wow. Significant impact.
And they're not stopping there. Ample Parks aims to acquire and develop 10 times the current land portfolio, roughly 750 acres, across India in the next, say, 5-7 years.
Ambitious expansion plans.
Targeting cities like Chennai, Delhi NCR, Mumbai, Kolkata, Ahmedabad, Pune, even Tier 2 markets.
So connecting this to the bigger picture, this clearly reflects India's growing demand, right, for high-quality industrial and logistics infrastructure.
Driven by e-commerce and manufacturing is now.
E-commerce boom, manufacturing expansion.
Yeah.
It raises the question, how will these large-scale developments shape regional economies and, supply chain efficiencies for companies both global and local?
Yeah, good point. Okay, next, let's dive into healthcare. Apollo Hospitals Enterprise Ltd, or AHEL.
Okay.
They've announced a spin-off. Their digital health, pharmacy distribution, and telehealth businesses are going into a new entity called NewCo.
Right, the goal being to unlock value through a direct listing.
So how does this work? It's a composite scheme.
Yeah, it involves basically 3 key steps. First, Apollo Healthco Ltd merges with this NewCo. Then, Kineed PVT Ltd, which is a leading wholesale pharma distributor in India, also merges with NewCo.
Combining forces.
Right. And the combined entity, NewCo, is aiming for some pretty big numbers. FY25 revenues around rupees 16,300 crore. That's about $1.9 billion US.
With ambitions to reach 25,000 crore, or $2.9 billion by FY27.
Exactly. And they're targeting an EBITDA margin of 7%.
So what does this mean for HEL shareholders? For you listening.
Well, HEL shareholders will get 195.2 shares of this new company, NewCo, for every 100 HEL shares they hold. So they get direct participation.
In the high-growth digital health and pharmacy side.
Precisely. The listing's expected within 18 to 21 months, and NewCo will be classified as an IOCC, an Indian-owned and controlled company.
And HEL keeps a stake.
Yeah. HEL retains 15% and gets a nominee director on the board.
So the thinking here is consolidation. Synergies.
Absolutely. Consolidate the front-end pharmacy business, create synergies across the supply chain, customer engagement technology, potentially reaching over 100 million Indians.
Dr. Pratap C. Reddy called it the beginning of the next chapter.
He did, in their mission to democratize healthcare. So this structured approach, it really raises the question of how effectively it will accelerate the digital transformation of healthcare access in India.
Interesting move. Okay, let's zoom out now for a quick global market update. How's the Indian market looking?
Well, looking at a mildly positive start. GIFT Nifty, that's the Nifty derivative on the Singapore Exchange, often an early indicator.
Right.
It's trading around 25,770. Suggests some optimism. This follows generally positive global cues.
Like progress on a U.S.-China trade deal and maybe easing Middle East tensions.
Seems so. The Israel-Iran ceasefire appears to be holding, which helps sentiment. Asian markets traded higher today. Nikkei up 1.68%, Kospi up 0.85%.
And Wall Street finished strong on Friday.
Yeah, the U.S. market ended higher. S&P 500 and NASDAQ hit all-time closing highs. Dow surged 1.80% too.
Any specific stock movers catching your eye?
Well, NVIDIA shares rose 1.8%. Amazon rallied 2.85%. Some big tech strength there.
Okay. And macroeconomic news.
U.S. personal consumption expenditures, the PCE price index, gained 0.1% in May, which matched estimates. So inflation measure looking okay there.
The consumer spending.
Ah, yes. U.S. consumer spending unexpectedly fell by 0.1% in May. That was contrary to expectations of a small rise.
Interesting. But sentiment was up.
Yeah, despite the spending dip, U.S. consumer sentiment actually rose sharply in June. Hit a 4-month high of 60.7. So a bit of a mixed signal there.
And Japan.
In Japan, factory output rose, but slower than expected in May, up 0.5% versus a 3.5% forecast.
So quite a few mixed signals globally.
Definitely. It raises the question, how will these mixed economic signals influence global monetary policy decisions and, investor sentiment in the coming months?
Good point. And quickly, commodities. Oil and gold.
Crude oil prices fell about 1%, partly easing Middle East tensions, but also expectations of an OPEC output hike may be weighing on it. Gold prices also declined, hitting their lowest in over a month. Easing U.S.-China trade tensions seem to be dampening that safe haven demand.
Okay, thanks for that global snapshot. Let's bring it back to specific companies. IndusInd Bank.
Banking sector again.
They've submitted a short list of 3 senior bankers to the RBI, the Reserve Bank of India, for the CEO position.
Right. This follows that $230 million hit they took last fiscal year.
Due to misaccounting of internal derivative trades.
Exactly. Which led to the resignations of the previous CEO, Sumant Kathpalia, and the deputy, Arun Khurana, back in April. The RBI wanted names by June 30th.
So who's on the shortlist?
Okay, the names are Rajiv Anand, who's currently Deputy Managing Director at Axis Bank, Rahul Shukla, a group head at HDFC Bank, and Anup Saha, the Managing Director of Bajaj Finance.
Any frontrunner.
Well, according to sources, Rajiv Anand's name has been given first priority by the board, citing his reputation, his experience.
Okay, and they suggested a term length.
Yeah, the board suggested a 3-year term for the new chief executive.
So this raises a pretty important question, doesn't it? How will this selection of new leadership impact the bank's strategy and its path forward after these recent setbacks?
Absolutely. For you watching, it really highlights the critical role of leadership and also regulatory oversight in the financial sector. Getting the right person in place is crucial now.
Definitely. Okay, next up, Joya CNC Automation. Their share price declined amid news of a large block deal.
What's fascinating here is just the scale of the transaction. About 6.06% of the company's equity changed hands.
That's 1.37 crore shares, or 13.7 million shares.
Yeah, traded through a block deal. The value is rupees 1,499 crores, so about $180 million US.
And the price?
The shares went at rupees 1,087 per share, which was actually 3.7% discount to the closing price on Friday.
And the market reacted how?
Well, the share price dipped more than 4% intraday on Monday after that news broke.
Okay. And there was other news from them, too, about debt.
Yes. In other related news, the company disclosed it significantly reduced its outstanding long-term borrowings during the last financial year. Went from rupees 2.57 crore down to just rupees 0.22 crore. That's a huge reduction.
So what does this block deal situation tell us?
Well, it raises an interesting question about market dynamics, right? How do these large block deals, even if they involve non-promoter shareholders, influence the immediate share price?
Even with positive news like debt reduction happening.
Exactly. For you, it just underscores that various factors can affect stock performance. It's not always just about the core business operations. Large trades matter.
Got it. Okay, another bank in development, Karnataka Bank. Their share price crashed after top management stepped down.
Yeah, this was quite significant. The MD and CEO, Srishnan Harasarma, resigned, cited personal reasons, decision to relocate to Mumbai, effective July 15, 2025.
And the executive director, too.
Yes, Ekar Rao also stepped down, effective July 31st, 2025, also citing personal reasons and inability to relocate to Mangaluru, where the bank is headquartered.
So 2 top exits. How did the market react?
The bank shares fell sharply, down 7.53% to rupees 192, which was a 4-week low.
That's a big hit, but the bank is trying to reassure people.
Yes. Despite the leadership changes, they've acted quickly. Formed a search committee for new leadership, appointed an experienced senior banker as chief operating officer. And they've assured stakeholders about operational stability, their capitalization, fundamental soundness. They did report a decline in net profit for the March quarter, though, down slightly year on year, but interest earned was actually up.
Still, it raises a question, doesn't it? How will such a major leadership transition, even with these assurances, influence investor confidence and the bank's strategic direction going forward?
It absolutely does. For you, it just illustrates the immediate, sometimes quite strong impact leadership shifts can have on market perception. Uncertainty tends to do that.
True. Okay, let's turn our attention now to Piramal Pharma Solutions. They're an Indian CDMO, right? Contract Development and Manufacturing Organization.
Correct. And they're investing $90 million to expand 2 of their U.S. facilities.
What's the focus of this investment?
It's pretty specific, enhancing commercial-scale manufacturing capabilities, specifically at their Riverview, Michigan, and Lexington, Kentucky facilities.
And these are important for their ADC offering, antibody-drug conjugates.
Exactly.
Yeah.
Both sites are integral to their integrated ADC offering, which they call ADcelerate. The Riverview site, it specializes in payload linkers. Those are crucial components for ADC therapies. They expect a commercial-scale suite there by late 2025.
And Lexington, what's happening there?
So the Lexington facility in Kentucky, that's Piramal Pharma's dedicated fill-finish site for sterile injectable drug products. The expansion there will add 24,000 square feet of manufacturing space.
Okay.
Plus a new laboratory advanced machinery. It's expected to basically double their capacity, from 104 annual batches to over 240 by late 2027.
And creating jobs, too.
Yes, expected to create about 40 new full-time jobs as well.
So connecting this to the bigger picture, this fits with the trend of U.S. onshore manufacturing, supply chain resilience.
Absolutely. It aligns perfectly with that push. And Nandini Piramal, the chairperson, noted the sterile injectables market is projected to exceed $20 billion by 2028.
And ADCs are a hot area.
Very much so. Rapidly emerging as effective precision immunotherapies. So this raises the question, how will this strategic expansion position Piramal Pharma to really capitalize on that growing global demand for advanced pharma manufacturing? Looks like a well-timed move.
Seems like it. Okay, next development focuses on Ratan India Power, a small-cap stock that's been on a strong bull run.
Gaining another 11% today, marking its 5th straight session of gains.
So what's the momentum look like overall?
Pretty impressive recently. The stock's seen an 18% cumulative gain over just these 5 days. And June alone delivered a 35% return for the stock.
Biggest monthly gain since May 2024.
That's right. And over the last 4 months, it's posted a total gain of 72%.
But this comes after a big drop, right?
It does. It's a significant turnaround. The stock had fallen nearly 60% from a 13-year high of rupees 21 back in June 2024 down to its low in February 2025.
So quite a recovery, but still below its all-time high.
Oh yeah, well below. The all-time high was rupees 45 back in October 2009. So perspective is needed.
And interestingly, the company says there's no specific news driving this surge.
Correct. They clarified to the exchanges that no material information or announcement had been made that would explain this sudden strong rally.
So that raises a really interesting question, doesn't it? What underlying factors, if any, could be driving such sustained positive sentiment and trading volumes, especially when the company itself says there's nothing specific?
Exactly. For you watching, it highlights those market dynamics again. Sentiment may be momentum trading, how a stock can sometimes break a long losing streak, seemingly without a clear catalyst in company news. It's fascinating.
It really is. Okay, finally, let's dive into a development from Sonacomstar, India's biggest importer of rare earth magnets. And they're planning to actually manufacture these critical components domestically, components they've traditionally sourced from China.
Yeah, and this is a pretty direct response to, well, global geopolitical shifts and supply chain vulnerabilities that have become really apparent.
China produces most of these magnets, right?
Around 90% of the world's rare earth magnets, yes. And they imposed export restrictions back in April.
So India is trying to reduce reliance.
Exactly. India has the world's 3rd largest car market, 5th largest rare earth reserves. So the potential is there. The government is working on a program to incentivize local magnet production.
And Sonacomstar is right in the middle of this?
Very much so. They supply components to big names like Tesla, Stellantis. They imported 120 metric tons of these magnets from China just last financial year.
Wow.
The CEO, Vivek Vikram Singh, actually stated they are the single largest affected party in the country by these shifts. And they're actively working with the government on India's self-sufficiency plan for magnets.
So this raises a big question about global supply chains, doesn't it? How will India's push for self-reliance in critical components like these magnets reshape things and foster domestic manufacturing?
It's a huge question. For you, it's a really clear example of how global trade tensions can actually spur innovation and localized production. Though, developing the full mining and processing capabilities needed, that could take years. It's not an overnight fix.
Right. And they've made other moves, too, diversifying.
Yeah. The company also recently diversified into the Indian Railways business and appointed a new chairman after the passing of Sanjay Kapoor. So several strategic shifts happening there.
Okay. Well, that wraps up another deep dive into these recent developments shaping our world. Quite a mix today.
Definitely. From renewable energy milestones, crucial medical approvals, shifts in global supply chains. It's clear the market is just this dynamic tapestry, isn't it? All interconnected events. And our goal, as always, is just to help you navigate this complexity, try to provide some clarity, some context that goes beyond just the headlines.
Hope we did that.
Understanding these individual developments, hopefully, helps you grasp that bigger picture and their potential implications down the road.
So what does this all mean? Well, as you continue to observe the market, maybe consider how these developments, which might seem disparate, could actually influence each other. Create new opportunities, perhaps new challenges.
Yeah.
It's just a powerful reminder, I think, that truly being well-informed is a continuous journey, always connecting the dots.
Well said. Thank you for joining us on this deep dive.
And please remember, we are not SEBI-registered financial advisors. If you are considering making any investment decisions, please consult a certified financial advisor.